My name's Rob Ryder, speaking out of Cornwall in the UK, in England. This video is just a quick one regarding my book. I'll put a link to below, Debt Slavery, the Economics of a Banking Mafia. And I want to clear up something which I believe people are taking advantage of or trying to have a misunderstanding regarding money creation. Now, I'm of the viewpoint we should be paying our mortgages. Yeah? Not the interest, but we should be paying our mortgages. And there are a lot of people are saying, oh, well, we created that money, therefore we shouldn't pay it back. You have to go back to the beginning. What have you actually created? So you need to understand that the promissory note and what that means and credit. And again, you'd have to go back to the beginning of the book. I've done other videos on this. I don't want to repeat myself to get to the basics. But currency is a form of money. Money can be anything that you, given a value, you can exchange. But currency is a specific form of money. Paper, coins, electric currency nowadays. So when you get your mortgage, you sign a promissory note to pay the bank 100 grand over 20 years. That, then you've signed a piece of paper that now has £100,000 worth of value because you promised to give the bank £100,000 over 20 years. You haven't created your own money exactly. The bank then used the value of that to credit your account. Obviously, we know they're not lending money. What's important to know, credit is an advance on your future earnings. All currency has to represent some productivity, or you get massive inflation. As I've said before, you create money for assets, you get an asset puzzle. You create money for consumerism, you get inflation. You create money based on productivity, you get stability. So you have to pay back the money because you've had an advance of 20 years earnings that you're going to pay back. You've created credit. Yeah, it's a form of currency, but it's credit that you've been given. Yeah. If you think you don't have to pay it back, then you're going to get double. You get credited in your account off the bank, 100 grand. And then over the 20 years, you're not paying it back. You get credited 100 grand, and as you pay it back, that takes that money out of circulation, because the money that's paying back is money that's backed by productivity, your productivity. It stops inflation. You can't just think, oh, I created that money, therefore I don't have to pay it back. No, otherwise that's utter insane thinking. Otherwise, we could all just create our money, then money would be valueless. Money has to represent a unit of productivity. You can't just think, oh, I created that, therefore I don't owe the bank. This is nonsense thinking. Now, if you want to go down the lines of, well, I was deceived, I didn't know it's credit, the bank are charging interest, and say, I shouldn't pay it based on that because it's morally wrong and I've been deceitful, that's a separate issue. That's fine, I've got no problem with that. People shouldn't be paying the interest because that was never created, and that's where the fraud takes place. But there's a lot of people lost homes and houses just thinking, oh, I created that money, therefore it's mine, therefore it wasn't the bank's, so I don't have to give them back. These people don't understand the concept of what currency is, what production is, what a unit of production is in relationship to currency, and the fact that you can't just print your own money and think it'll have value without doing anything. There's a huge misconception and misunderstanding regarding this. You can't just create your own money. It has to be backed by productivity. This is what the Bradbury Pound national credit is to fill the to create the infrastructure. It's backed by productivity, and you won't get inflation. Yeah, you pay it back because as you're paying it back, that money is being used productively. Because if it stays out there, it won't have any value because the production's been done. Yeah. Currency, a unit of currency has to have a unit of productivity to back it. That's why credit is fine, because I can't afford to buy a house now, But I know over 20 years, theoretically, I could pay 100 grand backed by my productivity that I will do over the next 20 years to pay that off. I can't create 100 grand credit via the bank and then earn that productivity and not pay it back. You just have mass expansion of the monetary system without a mass expansion of productivity, and you would get massive inflation. And this is a big thing that's not getting understood. Yeah, if you want to challenge it, because they're all corrupt and get around that, fair enough. But understand that we can't just the fact that we created our money via the bank created a credit for us based on that promissory note. You have to pay it back. You have to pay your mortgage back. What you don't have to pay is the interest. That's the issue. I might not be popular for saying this, but if we want to bring in a fair monetary system, it has to be done correctly, and credit is perfectly fine. It's a fine system when you take the interest out of it. And I've gone into in other videos how that could be done with local community bank, credit banks, different ways we could create our own credit. But if you make a credit, it's an advance on your future earnings. Yeah, so you've pumped 100 grand out based on productivity. Once you've done that productivity, you have to pay it back, or you get unlimited inflation. People just have to think a little bit clearer, in my opinion.